All right. Hi, my name is Chester Johnson. I'm the co-founder of the Stockteamup app, and today I'm here with Guivens Andre. Guivens is a entrepreneur who started the app Ami. Try again. He started the app Amy, which helps people learn a different language. Guivens, thanks again for joining me on on this video.
Yeah, bro. Anytime, man. Anytime. It's a pleasure to be with you.
Guivens had the honor of being my first person I interviewed, and it's so far still been one of my favorites. So I'm so happy to talk to him again and see his thoughts about where we're at in Q4, just a few weeks before the election, his thoughts on investing. So Guivens, go at it, man. What's your thoughts and what's your questions?
Yeah, bro. So one of the questions that I have right now for you is so my Apple stocks actually split the other day.
Yeah.
And um I didn't really know what happened. I woke up and realized that my Apple stock shares were a lot less, and I completely panicked because Apple stocks are at $500, and so I couldn't understand how it dropped $400 overnight. And so for me, I really didn't even know what a split was or split meant, and even now I still am trying to really wrap my mind around it. So if you could just elaborate a little bit more and provide clear an explanation as to what it means when stocks split, it might be able to help out myself and a whole bunch of other people that might be watching this as well.
Sure. That's an easy one. So when a split happens, nothing actually happens with your valuation. It's the same amount as it was the day before. The reason why they do a split is, let's say you and I, Givens, were in a company, right? And you and I both had 100 shares of this company. So there's 200 shares total. And then like 100 more people want to buy into it, right? But they're only going to have a small piece.
Mhm.
Well, if we only have these 100 shares, we'll want to make them smaller so that people can still have a piece of the company at a reasonable price. So um, the extreme example is if you look at Berkshire Hathaway stock, Class A shares,
Mhm.
each one of those costs $150,000 a share. It's kind of hard for a lot of people to get into it, but by splitting the stock, if you split the stock into four pieces, then it's the price is 25% of what it was. So it just allows more people to buy into it.
Mhm.
Um, and Apple especially and Tesla, who like split, I think almost the same day. A lot of the retail investors and smaller investors are interested in it, so they want to keep that price low so that people can get into it. So when that happened to your Apple stock, you have the fortunate opportunity where now more people want to buy it, and then it's going to keep on appreciating in value, hopefully.
Right. Got it. Got it. You know, I do some well, because of my app, right? Because of my software, I do some reading on Duolingo, right? Because they are king of language right now, right? And I do some podcast listening to Louis Von On talking about how he, went about to create Duolingo. And he's actually thinking about going public. Well, he says the mission is to go public with Duolingo. So pretty soon, people will be able to buy shares of Duolingo because it'll be publicly traded. So, what for companies, right? Like, what at what point do they decide? What are the deciding factors for companies when they decide, hey, we want to go public? And when they finally do go public, for the people that are going to be buying, for the public that will be buying, how do we know, like, hey, like this is a great company to invest in? It's here now. So
Man, that's a great question. I will not answer this 100% correctly, but I'm gonna try my best.
okay.
So, so there's a certain point where I would say, probably your brand and your investor pool and your earnings are high enough that it makes sense to let the general public buy shares of your company. Uh, One thing you have to consider when you go public, and I've never gone public, so I have to only go by what I've read and what I understand about it. The I can say I've read, SEC regulations for my other different ventures in my past, and so there's an extra requirements of what you have to put into your filings for a publicly traded company. There's more there's more risk if you screw up um, your numbers. If there's some accounting problems, there's more scrutiny.
Mhm.
So you have to weigh the scrutiny of your accounting versus your opportunity with investors to come in. So I'll give two examples. Wrap Snacks, I don't know what they're going to do. I talked to them, but I don't know what they're going to do. So full
Yeah, Jake
disclosure,
is talking about it too.
yeah, yeah, I don't know what they're going to do at all. I have no idea. I just talked to them. I know they're a big company. So I'm
Yeah.
just, I don't know what they're going to do. But for them, they have a huge audience, and and potential retail investors that might be interested in investing in them. So if it's big enough, then maybe it's worthwhile for them to do it. But again, I don't know what's going on with them. So this is nothing. I don't know what's going on at all. But they have to weigh it versus, okay, I have this opportunity of all these people that want to invest, but I have this more regulations on me, and my accounting book's going to be wide open at that point. So
Right,
you have to weigh that.
right.
On the flip side, just today, there's talks of Dunkin' Donuts going private. So they're going to get bought out by a private company. And one of the reasons why I've read they like to do that, to go from public back to private, is because when you want to start doing more innovative things and changes to your business that
Mhm.
might be maybe a little more risky and more venture, like,
Yeah,
you might want to go private so that you don't have all that scrutiny on your earnings,
right,
and so that they can grow and then maybe go public again.
right.
So I've seen this before. I can't give any other examples. Duncan's just the one that popped up because that's happening today. But they might be wanting to do that because they want to expand their brand, expand what they're doing. And if they have all the scrutiny of investors constantly asking them questions about why their earnings are going down, while they're trying to really, sacrifice earnings to grow into new businesses, maybe
Mhm.
they may not want that right now, and hence they'd go private. So
Well,
yeah.
on that, yeah. Well, on that topic, if you're someone who had shares of Dunkin's, what happens to your shares? What can you expect once
Well,
that company goes back to private?
I'll just tell you what I saw as I walked right by the TV today. Duncan went up like 13% today. So usually it's a good sign for you if your company's about to get bought out, and go back to private. You will get paid for your shares. There's likely some kind of clause in the shareholder agreements that you actually are a part of once you buy the shares, where if if the board decides they're going to sell out, then you have to go with it. There's no choice for you.
Mm,
These are the kind of things that as you learn more about investing and the companies you own, you'll get more understanding of. um, so most of the time it's a good thing for you, and whatever price they've negotiated, which the board members own shares too, so they want to negotiate up also. So they
mhm.
usually have your interest in mind, so you'll likely sell at that price. And looking at Duncan again, it's probably like a price that was probably 13 or 15% above today's trading price. Hence why there
Right.
was that sudden jump.
Got it. Got it.
Yeah.
Got it. Well, so COVID is still here.
Yeah.
Like many months later, it's still here, and it seems like it's going to continue to be here for some time. As talks about jobs closing, reopening, closing, and just so many uncertainties, and people being a little bit more conservative with their incomes, with their money, just because they don't know what the future might hold, do you think it's still a good idea for people to invest in the stock market?
I think it's still fine to invest in the stocks that you like. There is no, I'm always wrong about the highs. I was wrong for years. I've been out of the market up until 2020. So I might have hit the bottom in March, but I was
Mhm.
missing those tops. So I don't think it's bad. If you think it's a good company, I'd go for it. There's an interesting thing going on with COVID where the the amount of COVID cases are going up, but the
Mhm.
deaths are going down. And I think there's a lot of reasons why, but my guess is one of the reasons why there's less deaths is
Mhm.
because there's a lot of prevention.
Mhm.
You're trying to avoid being around people that are more likely to have more serious issues with it. And I just seen more things open up. So I think that I think that the Wall Street is thinking that we're going to stay open. We're just going to keep on going open. If you believe that, go for it. If you don't believe it, then pick and choose wisely the stocks you want to pick. I still own Tesla, just to give it to you. Full disclosure, I still own Tesla.
Mhm.
It's the only one I own right now because I think everything's overvalued anyways, but that's
Yeah.
I said that last time, so I was wrong then and now I'm wrong now. So, you know,
Well, I'm glad you brought up Tesla because I remember on our last episode I told you I bought some Tesla and I got overexcited and ended up selling Tesla simply because it climbed pretty high, right? But then a few months later it split. And so how long would you recommend that you hold on to your stocks after you purchase them?
I'll tell you, 2020 has taught me a few things because I won't lie to you. I'm usually like that. I've made that mistake where I've sold Netflix, Google,
Ooh, you
uh,
said Netflix.
I sold Netflix, Google, a bunch of other stocks. I'll make like 60%. I'm like, well, I'm gonna get down now, and
Yeah.
then it keeps going up,
Mm,
and it was legitimate growth. It wasn't
right.
like some kind of momentum thing where it was just a trick and then it goes back down. It was correctly going up, and the revenue was shooting up also.
Right.
I think that there comes a time where a company isn't in anymore. It isn't making the products people want anymore.
Mhm.
And when you stop, I think when you find something that's more interesting, you
Right.
should get out and try the other one. And this is
Right.
new. I didn't even think about this until this year. But I think, I like Tesla because I think Elon Musk is crazy. I think he's just going to keep on driving it until you know, because
Yeah.
he's going to keep on growing it no matter what. So I'm just going to stay in, um, and going a little less on numbers and more on, what's the culture of that company. On the flip side, Google is its culture is coming a little bit of a mess. Its technology I've had issues with,
Mhm.
and they're going through an antitrust case.
Mhm.
So we're for the last 15 years, I've always been like, man, Google's a great stock. You should just there's no harm. Now it's say, well, maybe you should try something else
Mhm.
because Google's having all these problems that might be long term detrimental.
Right. Now let me ask you: are there any tax implications when you decide to sell either early or hold your shares?
So bottom line, it's 1 year. So if you hold for 1 year, you go into I can't remember the term. It's you get a lower income bracket
Mhm.
from that sell.
Mhm.
It's really low. I think it's in the 20%, or even below 20%.
Mhm.
But it's called long-term capital
Mhm.
gains.
Yep.
Short-term capital gains, man, I think you're almost at normal income actually,
Right.
which is pretty bad. So
Yeah.
long-term investing is much better for your taxes.
Yeah. Yeah. Well, bro, that is pretty much so far all of the questions that I have for you right now. Um, well, I'll continue to have them keep on coming, and when I have them, I'll definitely share them with you so that we can continue to um, educate people who want to learn more about the stocks. They
Awesome,
have
man.
they've been doing me great, and you've been a great help with that, and I want to continue to learn. So
Awesome, man. Keep up on the entrepreneurship. And for everyone watching, try out the Stock Boss Up app and subscribe at stockteamup.com. And thank you very much. Givens, thank you.
no problem, bro.
Thanks.